It is the middle of tax season, and I feel like I am going crazy with tax returns. But today we are going to take a break from taxes, and we are going to talk about something a lot funner. In this episode of Travis, Can I Have This? We're going to talk about credit cards and credit card rewards, how you can milk it. So our last episode, we actually talked about you as a business owner having to take credit cards and pay merchant processing fees, which we hate. We don't want to pay merchant processing fees. But hey, now we're on the other side and we're a user of credit cards and we love it. We want to milk this train as much as we can. And that is what we're going to talk about today. Now, one thing to know is there are two big types of credit cards, and one of these you may not have heard about. It is a newer type of credit card, like an entirely different structure and organization and like platform for a credit card than the traditional Chase Capital One type credit card. So we're going to talk about these two types of credit cards, what you should consider in your practice, and how to milk this. If you have a practice, and let's just say you do $1 million in revenue, you spend at least, let's just say 6% of that $1 million, so $60,000 on supplies. You can probably pay all of those supplies with a credit card. There's probably a bunch of other vendors that will take credit cards. So we're talking most dental practice owners have $100,000 that you can spend on a credit card. And that means some serious rewards, some serious points. Also, those rewards and points are usually not taxable. So it is just gravy train when it comes to using the credit cards. Now we know why those merchant fees are so high. It's not all free out there. It's the business owners who are receiving the credit cards that are paying for this. But hey, let's get in on some of this. And today, let's break down how to decide what credit card you should use for your dental practice. Let's get to it. All right. We love being able to spend credit cards. Don't tell this to Dave Ramsey. He hates credit cards. Now, I think he hates credit cards for some good reasons. Credit cards are too easy to spend money. It's too easy to lose track of expenses. That's why a lot of dentists I hear, they like paying by check sometimes because their office manager queues up the check and then they go to sit at their desk and they have to sign all these checks and they look at these physical checks. I'm paying this much for rent. I'm paying this much for utilities, all these things. This much a lab expense. I don't know. I was paying that much of a lab. Like it kind of is a nice forced way to help you review your expenses if you don't use a credit card and you have to write manual checks. But also that's kind of a pain in the butt. So a lot of dental practice owners are using credit cards more and more, but it's easy for your spending to get out of hand. Another thing, and another for good reason, Dave Ramsey probably doesn't like credit cards, is people are financing things with their credit cards. So think, you get sign up with a credit card and they say no interest for a year. Okay, well, I just charged $30,000 and I'm not getting charged interest, so I'm not going to pay it back right away. It's a slippery slope and can cause some problems down the road. So before we get into the meat of credit cards and how to decide, I do want to make sure you understand probably the best practices for credit cards. And I think most people do get this and don't disagree. But the assumption is you will pay off your credit card every month on time, if not early. You never want to be late on your credit card, and you really should not finance anything ever on a credit card. Now, I do want to be sympathetic. There are some times where you are a dental practice owner and you're in a tight spot with cash and you're having a hard time getting a line of credit or funding from banks. There's some hard money lenders out there. Could talk about that for a very long time, and the credit cards may seem like a better option, but you really want to avoid financing anything on a credit card at all possible costs. Even if there's 0% interest for a little while, it's not going to be forever, so you don't want to get in that habit. So you might as well just get in the habit of paying it off immediately. Okay, so with those assumptions, let's talk about the two main types of credit cards as I'm defining them today. The first type I'm calling traditional credit cards. The second type I'm calling spend control cards. It's a bad name. I should come up with a better name. But let's talk about the traditional credit cards. All right, so this is Chase, Capital One, Bank of America. You apply for a credit card, they give you a credit limit. As long as you have a decent credit score, they'll give you a decent credit limit. And if you own, let's say you own an S corporation and you're looking for a credit card for that S corporation, they'll probably do the underwriting under your own personal credit score for that S corporation, even though it'll be a business card. So it's all tied to your personal credit, and you can usually get a pretty decent credit limit if you have a decent credit score. Now, the main purpose or perk of these credit cards is you get either cash back or you get points, which can be used for travel and other random things sometimes. Now, usually you want to have one, maybe two of these credit cards in your office that you use. And in practice, in theory, usually you probably share this card with your staff when it comes time for them to order lunch for the office, order supplies. This card gets passed around a lot. Loosey-goosey usage on this credit card, but it kind of helps keep the juices going on the practice. It's kind of the typical setup. Now, the first decision you have to make when you decide on a traditional credit card is, do you want to go for cash back or do you want to go for points? And historically, I've always been a cash back kind of guy. Like, hey, just do cash back. The calculation is simple and the usage of the benefits is guaranteed. You know that you will get the perk in the form of cash. So it's not like these points that you're going to forget to use. You're going to get it, you're going to use it, and it's simple. And I think that's usually a pretty good thing to do. Now, recently, I've been turned on to points. So I don't want to discredit somebody who wants some guilt-free travel and you want to use points. I did a baby moon about a year ago before we had our last baby. And we hadn't traveled in a very long time. It was actually the first time we had gone on a trip, and it was just me and my wife in 8 years. So it was a big deal. I wanted to go hard and I was going to use my credit card points. We had a bunch of points we hadn't used. So we used these credit card points, and in the process of me using them and booking the hotel, and it was a nice hotel and I wanted to use points, I don't want to pay for cash. There was enough nuance there where I realized I was not doing it the best way. Like, I wasn't getting the most usage out of these points that I had worked so hard to earn. And that kind of turned me off on the whole points game. It's like, it is a game and you have to know how to navigate the system. But I recently came across this guy, Colin Stroud, I think is his name. I saw him on LinkedIn. I'll send his link in the show notes. If you're going to do points, use this guy or someone like him. I don't make any money on sending you this guy, but you got to use someone like this if you're going to use points. He helps you navigate all the nuances of using those points. He has courses and he has a website and he'll just do it for you. And even if you're paying him to do it, I'm pretty sure you're going to get a return out of somebody who knows how to manage the points game. Once you have the points, that you go to someone like this. But again, when you go down the points game, it gets a little bit complicated and you got to know how to navigate it. And sometimes I just don't want to deal with that when it comes to my business benefits and rewards. And if you have another partner in the practice, it gets a little bit more complicated, but it's a game. So you got to kind of know how to play that game. Now, one game that comes up sometimes is if you know some people who are credit card gurus. And a lot of credit cards, they'll have, sign up and get $50,000 points in the first month, or sign up and get so many rewards. And, you got to use it, but you'll get certain points by signing up. And so sometimes what people do is they'll sign up for 5 different credit cards in a year. And it becomes a mess if you are trying to do this with your practice, especially in terms of bookkeeping and tracking your expenses. You want your bookkeeping operations. Obviously, I'm an accountant, so I care a lot about your accounting systems, but you want your accounting system to be somewhat automated so that you can get your financial statements timely so that you can make good financial decisions quickly. So by you adding credit cards and canceling credit cards and playing these games, you're slowing down your systems and operations. and slowing down the time that you have to make sound financial decisions. Do not play the multiple credit card game inside of your practice. Yes, I realize that because you spend a lot of money, you could get a lot of points, but don't do that inside your practice. I've never seen it be worth it for those dental practice owners who have done that. And I have seen it, and it has been painful. And they have stopped. There's no one that is continuing to do that I've seen. Now, in this category of traditional credit cards, there are 3 credit cards that I see all the time on the list of like best credit cards. And there are a lot of big companies who spend all their time researching credit cards. And there's YouTube channels on like what is the best credit card. So I'm not even going to try to compete with those people on, what's the best credit card right now today. It changes. Different credit cards have different promotions. But over the past several years, consistent credit cards that I've seen that have been pretty competitive are going to be the Capital One Spark card. The Spark card has a cashback or a miles or a points option. That's always a pretty solid one. The Chase Inc. card for businesses, also a pretty solid one. They have cashback or points. And then, of course, American Express. American Express always is known for having really good rewards. I think the Business Gold is a really good one. If you spend more than $150,000 a year on your business, has a lot of perks there. Without going into too much detail, I think those are 3 really solid ones to look at. Again, if you're going down the points game, make sure you are knowing how to use those so you milk them as much as possible. Now, which of these cards do I use in my business? None of them. I have been turned on recently to a newer type of credit card. And I say newer, let's say like in the last 5 years, this really picked. I would say like within the last 3 years, it's really picked up. So not like fresh off the press, but pretty new usage for credit cards. And these newer companies that have these cards, they are called Ramp. You may have heard of Ramp, Brex, or Divvy. Divvy recently got bought by Bill.com. So it's Bill.com/Divvy. I don't really know exactly what name they go with, but these are some of the cards that I'm talking about. And how these cards work is they function more like a charge card. So whatever you spend in that month or that week gets paid off in full. There's no balances that get carried forward. So their underwriting process, they care a lot about, okay, what credit limit do you want and how much cash do you have in the bank? And they look at your historical cash in the bank and approve you for a certain credit limit. And so depending on where you are in your practice and how much cash you have, you may not get approved for one of these cards, which is something to keep in mind. In comparing these types of cards for the typical dental practice owner, I think the most applicable card that most dentists will be able to get approval on is the Divvy/Bill.com card. That's the one that I have ended up using. I tried to use Ramp on some newer practices, but they didn't approve the underwriting. So the underwriting is a little bit trickier here, and that's definitely one of the cons on this. I think Divvy is probably the easiest one to get approval for. But there's no like traditional financing with these types of cards. Again, it's a charge card. Whatever you spend that month, you pay off in full. Now, for me, that's something I was planning to do anyways with any credit card, so that wasn't a big deal. Now, they do incentivize you that if you pay it off every week or twice a month, if you pay it off quicker, your benefits that they give you go up. So I pay mine off every week, which I don't know how I feel about it. I mean, it's not like I want to use that cash for anything else anyways, but sometimes it's nice to defer your expenses if you can. Paying it off every week feels like a lot sometimes, but also I don't think it's a bad practice for helping me manage my own cash flow of my business. Now, I've been using this Divvy card for about 8 months. I just want to share a couple insights on this. I just had an experience yesterday, which kind of got me jazzed about it. It's kind of why I'm talking about it today, honestly, but just kind of a high level overview. So think of these credit cards like a really, really nice website or a really, really nice app on your phone. They all have really good apps, really good websites. They spend a lot of money on the technology side of these credit cards. That's where really they have put their emphasis. Now, it doesn't cost any money to use these cards. So you're using their website, their interface, you're using everything, you're not paying anything. Probably what you are paying is less rewards on the credit card side of things. And we'll talk more about that. But the interface is super slick, it's super nice. And I can add cards very easily. So I can add a card if I have a front office person who's ordering lunches for people. I can create a card for her. I can create a physical one, or I can create a virtual one. And she can have her own card at the front desk for ordering lunches. And I can set a certain credit limit on that. I can change it super easily on the app. Hey, this month her credit limit's $200. Oh, that's, it's too much. I just want her to spend $100 a month on lunches. So I change it really easily. Then she quits, she leaves, and I turn off that card instantly on the app. Extremely easy to use. I can also require those team members to send receipts. So I can make them, if they spend anything, they have to send me the receipt and they have to take a picture of it on the app. And then also, I can create new cards for myself as the practice owner for different services that I'm doing. So I could have a card just for Henry Schein or a card just for supplies, and I can create certain credit limits for that to try to keep my spending in control. I signed up recently. This is what happened to me yesterday. I signed up for this software that helps me send proposals. And I forgot when I had signed up, they had a promotion for the first 3 months. It was discounted 50%. And after those first 3 months, then it went back up to normal pricing. Well, I created my own card for this software that I signed up for, and I set the credit limit at the promotion price. Well, when the promotion ended, I got a notice from this software that my credit card was getting declined. And I went in there to see what was going on because I couldn't remember. And then I realized, oh, it's that promotion. And I wanted to decide, do I want to keep using this software? And I ended up wanting to keep using it, but I wanted to choose a lower plan than what they had signed me up for initially. So if I didn't do that, I probably would, because it's software I like. I've been using it for 3 months. I like it. I want to keep it. But I wouldn't have caught that it doubled in price. That's something that would have been hard to catch in the financials because it gets lumped in with all my other software costs, which I have a lot of software costs. But by me catching that, I was able to keep the software, downgrade to a lower plan, and I'm going to save about $1,200 this year by having the lower grade plan, which is all that I need. I didn't need that higher one. So it saved me about $1,200 by catching that. It's actually closer to like $1,500. And I would not have done that if I didn't have this Divvy card and I didn't set it up as his own vendor and I didn't put the right credit limit on there. So instantly, boom, save me $1,500 on my spend. Even if the rewards aren't as great, I just got a lot more control. Now, if you think about in your dental practice, think about, getting a specific card for supplies. And you can give it to your office and it has a limit. If you want to have a certain budget on supplies, hey, we need supplies in the office, obviously, but this card has a limit and we got to make this work in the office and we got to be efficient with our supplies. We don't want a lot of waste. We don't want a lot of excess. Obviously, we need stuff there and you can play around with it, but it's a nice natural constraint that you can put on certain spending categories. I think, honestly, it's pretty awesome. Now, another thing that I really like is I've always struggled when, as a CPA, I feel this duty to be compliant with IRS guidelines. And one of the things is keeping receipts. That's always been really, really hard for me to do. And I use QuickBooks Online, and QuickBooks Online has an app and you can take pictures of stuff. But if I was out using my Capital One credit card and I was at a restaurant and I swiped a Capital One credit card, it's going to take a couple days to process. Then once it settles, it needs to sync with QuickBooks Online. And then once it syncs with QuickBooks Online, then I can go on and take the picture. But that's really 3 to 5 days after the transaction happens. With these types of cards, Divvy and Ramp, I can go to a restaurant, I swipe the card, I get my receipt, I go sit at my table, And by the time I'm at my table, it's instantaneously on the app. So I pull up the app, I pull up the transaction, and I take a picture. And now I have the receipt saved in my Divvy, and I can throw away that receipt. So because it's so instantaneous, it makes it easier to keep your receipts and your logs, to be more compliant with things. Now, the Divvy platform, if you signed up for it, you don't have to pay any money to keep it. Even if you stop using the Divvy card, I will have those receipts on the Divvy platform indefinitely. And they don't cancel my account and never doesn't get shut down, even if I stop using it. So it's a really nice thing to use or to try out. And even if you don't end up sticking with it long term, those receipts won't go to waste. You'll be able to use that platform. And again, it's not common that you'll need to show the IRS your receipts. It happens feels like less than 1% of the time in my experience that we have businesses getting audited that need to pull those receipts. But it does happen. And when it does happen to that 1%, it's really nice to be able to know where to go to find those receipts. So in summary, the best benefits of these types of cards is it gives you very advanced control over your spending, which will ultimately save you money. There's less likely for that credit card to get stolen because it's not hopping around the office. And if it does, it's easier to turn it off. And it is important to know that these cards are Visa cards or MasterCard, and Visa and MasterCard are the ones that have the fraud protection. So you still get the fraud, like if someone does steal the card and buys something big on these cards, which is going to be harder to do. But if they do, you still have the insurance that, Visa will reimburse you for that and those types of things, which is nice to have on credit cards. A lot of the fraud protection and insurance stuff and car insurance stuff, a lot of those perks that you like about credit cards, those come from Visa or MasterCard. So you're still going to get those on this type of platform. So the strongest limitation, though, is the lack of good rewards. So on my Divvy card, I get a flat 1.3% cash back. The points, they do have a points option. It just seemed really confusing and hard to understand. And it just was simpler. I get 1.3% cash back. Now, this is probably not as stellar as what I could get on an Ink or a Capital One Spark, which hovers around 1.5% to 2% cash back. Now, let's just compare my 1.3% to a 2% cash back. So if I spent $100,000 on my credit card, my Divvy is giving me a cash back of $1,300, whereas a traditional card could give me up to $2,000. So I'm losing out on $700 of rewards if I'm comparing the cash back. But if you think about my experience yesterday, my new card just saved me $1,200 over this year. Who knows how long it would have been perpetually, how long I would have caught it for. So I'm already on top when I think about how much the spend control is giving me. And I think as a dental practice owner, I think the savings are pretty significant if you get organized with how you're spending things. I think there's a lot of money left on the table by just careless spending with your credit card. Not everyone, but I think that's a pretty common thing. So in conclusion, I think if you're somebody who is really passionate about rewards and you want a guilt-free travel vacation, it's totally cool to go with a traditional credit card, go for one with strong points, lean in, get as much of those points as you can. And when it comes time to exercise those points, I would consider using a professional that can help you get 2 to 10 times more points out of your usage if you do it the right way. Now, if you prioritize expense control and organization, which as an accountant, if I didn't prioritize organization, you should question what I'm doing here, but I definitely do. And if you prioritize those things, you should get one of these newer spend control cards like Ramp or Divvy or Brex. Definitely don't use credit cards for long-term financing. And I would love to hear if somebody has an experience with any of these cards, traditional cards, if you've used Bill.com or Ramp in your practice and you've had a bad experience. I'd love to know why, what that has been. All of these podcast episodes are published on YouTube, which allows us to have comments and discussions on YouTube. If you do want to go to YouTube to share your experience with your credit cards, that would be awesome. Thank you so much for listening today. And as always, we'll be back with Travis Can I Have This? Thanks so much.